Good afternoon, guys. This is obviously part 2 of ratios. I'm now doing the November 2015 paper. You can see that, November 2015. And ratios again, I am just doing the asset test, return on shareholders' equity, ROSH, and net asset value per share. So I'm going to do the asset test ratio. The asset test ratio is, it's basically your current assets minus inventory is to current liabilities. So current assets minus inventory is to current liabilities. I won't always put the ratio because I want to do the calculations in whatever it's current liabilities, right? So current assets, if you look at in this particular question here, our current assets is 662, and you take out the inventories because we want to know whether there's too much of stock tied to current assets, because remember your asset test ratio is a liquidity ratio. We want to determine is the business able to pay off its debts. So with the current ratio, it includes the current assets, but with the asset test, we take out the inventory and we still check, is the business still able to pay off its debts? So we're going to do that now, and we will have a look, and they just want you to calculate. They didn't say compare, they didn't say comment, nothing, just calculate. So 662,300, the current asset, 662,300, and you minus the inventory, which is obviously sitting there, of 322,000 is to current liabilities. Now current liabilities, we just check it up down here. Current liabilities 510,500, 510,500, and I'm going to go there, 510,500, right, 510,500, and I'm just going to calculate that quickly, alright, so when I subtract these two, I get 340,300 is to 510,500. So I'll take 340,300 and divide, because whenever you're doing a ratio, you divide the left hand side from the right hand side. The right hand side will always be 1. 340,300 divided by 510,500, and I get 0.66 is to 1. Now, I said to you in the previous video, always make sure it's one decimal place, which our answer will be 0.7 is to 1. That's your current ratio. Now, the norm is 1 is to 1. So 0.7, not that bad, but it is a little bit of a liquidity problem arising. Now, the next ratio is calculate the return on shareholders' equity, ROSH. Now this ratio involves net profit over average shareholders equity times 100. There's a chair. I'm always going to refer to it, and it's your net profit after tax. This indicates what the owners or shareholders are getting for their investment in the business, and the norm of investments elsewhere, market related, is about 10%. So if it's more than that, then it's a good situation. So let's go and calculate it. Net profit after tax. So you'll find that I won't put the formulas here. I'll refer to it there because it just wastes time. You can obviously screenshot or whatever. Net profit after tax, and we get net profit after tax. And most of the time they will give it to you. Here it's 846,000. So 846,000 divided by, now if you go back, average owner's equity or average shareholders' equity. Now you and I know that shareholders' equity is made up of ordinary share capital and retained income. But be careful, when they say average shareholders' equity, they mean the shareholders' equity for this year, 2015, and last year's 2014. Average means divide by 2 because there's two amounts. So you can divide by 2 to get the average. So you add these two up and divide by 2. So 3,439,500 plus 2,718. 000. So 3,439,500, 3,439,500, and I'm doing this raw from scratch, plus I think it was 2,718 000. Right, 2,718 000. Now watch this carefully. You add these two put it in brackets. Once you add them up, equals to, then divide it by 2 to get an average, and then times by 100, because it's a percentage, right? So it'll equal to 846. Sorry about that, 846. There's only 3 ratios, so I'm not going to rush it. 846,000 divided by, when I'll do this calculation quickly. So obviously I take 3439,500 plus 2718,000 divided by 2. I get 3078,750, and then I times it by 100, and I'm going to check what I get, how many percent. Alright, so I get 27,48% if it's 2 decimal places. You can put this answer, or you can also say 27.5% if you want it to be 1 decimal. Always check the exam paper. I suggest round it off to 1 decimal place, should be fine. And you can show your 2 decimal, and you can say or that. Now net asset value per share is the last one I'm going to do. We did this in the first ratios video that I did a couple minutes ago. So net asset value per share, just taking you back as well, just for you to see how it works again, because the reason I'm doing this is I don't have to write the ratio down and waste time. I show you the ratio. It's the ordinary shareholders equity, not average, divided by number of shares issued. The number of shares issued always end of the year. End of the year, you check the number of shares at the end of the year. Ordinary shareholders equity, if they don't give it in name, you know it's the ordinary share capital for that year plus retained income. But we're quite fortunate they got it written as shareholders equity, which is the same thing as ordinary shareholders equity, which is 3439,500. So I know, and looking at, so ordinary shareholders equity 3439,500, and I'm going to divide it by the number of shares in issue at the end of the year times 100. So we're going to check now and then obviously see what the shares in issue at the end of the year. Remember, times 100, it's 100 cents. It's not getting a percentage now. Net asset value per share is 100 cents, and our answer will always give us so many 100 cents, and we just convert it to a rand value. So let's go and have a look at the number of shares in issue at the end of the year. Very important. I see they gave it to us here. They said on 28th Feb, because this is our year in 28th Feb 2015, the share register reflected a total of 690,000 shares issued to date. If you was not sure, this is what you'll do. This is the ordinary shares at the beginning of the year, plus any issued shares, minus the repurchase. Will tell you how many shares are in issue at the end of the year. So the beginning, ordinary shares plus any issued minus any repurchase. And if you do that, and most of the time, we do get that value. So we just need to be careful. But what I do know is that you see, when you're adding the beginning, it must say issued. Now here what happened is they just say their authorized share capital is 800, but how many percent of that is issued share capital? So since they don't say how many percent of it is issued, you couldn't really say 800 plus 150, 950 minus 60,000, which will obviously be 890,000. So we'll just be careful of that. So fortunately here they gave us the number of shares in issue at the end of the year. I was just trying to show you a way how you can get number of shares in issue at the end of the year. It's the issued shares at the beginning plus the number of new shares issued minus any repurchase of shares. So 690 has been given. We're quite fortunate with that, and we are on our way to finishing this part of it. So 3439,500, and I'm calculating it live with you. 3439,500 divided by 690, 000, and I get times 100, 498.48 cents. 498.48 cents. Right. So 498.48 cents. You could also convert it, or you could say 4 Rand, what it'll be, 4 Rand 98 or 4 Rand 99. If you want to keep it as 498.48 cents per share, you're more than welcome to do that. It is fine. You could put it in cents or you could put it in a Rand value. Alright, so hope you enjoyed that. I'm still going to do more ratios. This was 2015. I'll go to 2016. I'll go to 2017. I'll go to 2018 and 2019. So we've done 14, 15, 16, 17, 18, 19. You can then obviously go and practice Feb, March, 14, 15, 16, or whatever, May, June, 16, 17, 18, 19. And the more you do it, the more better you get, the more used to it you'll be. So all the best.